Hello and welcome to today's update. Today is 14th of February. Um, very volatile session today. You're looking at the daily chart of Nasdaq 100. This was one of the beneficiaries of today's action. Market was volatile because of the CPI report, which came in hotter than expected. We discussed this in the weekend video that we saw that monthly CPI number was going to come in well above previous month, and that's exactly what happened. And interestingly, despite a spike in inflation in the month of January, despite a rise in bond yields, at least the technology stocks somehow managed to finish in positive territory. So this is Nasdaq 100. Nasdaq closed up 88 points to finish at 12,590. Now, if you look at the daily chart, this is the daily chart. You can see that we've got this nice uptrend going. It's been consolidating right now over the last week or so, and it's doing it just above the moving averages, the daily 20 and 50 exponential moving averages. The green one is the daily 20 and the yellow one is the 50 and the black one is the 200-day. So you can see that it's been consolidating above these moving averages, and the daily and 20 it's been moving higher, and in fact they're both on the verge of going above the 200-day moving average. So this would be a very positive development. Also, if you look at the momentum indicators, they're all positive. You see RSI is above the 50 level, MACD is above the zero line. So both the price action and momentum indicators are positive at the moment. If we quickly look at the weekly chart of Nasdaq 100, you can see that it's currently above the weekly 20 and 50. And look at the momentum indicators. RSI is above the 50 level, and RSI has been moving higher. So this is definitely a positive sign. And look at MACD, it's been moving higher, and it's now heading towards the zero line. If MACD crosses above the zero line, this would be really, really positive for Nasdaq. So let's have a look at what can we expect, what levels we should be looking out for. First of all, on the downside, these two moving averages, the 20, 50 and the 200, they will provide dynamic support at the moment. So on any pullback, they should provide support. Now, as long as the price remains above these moving averages, I think the technical picture would be positive. So support would be these moving averages. The 20 EMA is at 12,000, around 12,200. So this green line, the 200-day moving average is around 11,927. So those would be the levels I'd be watching. On the upside, resistance would be the top of this candle, which is right here. It's around 12,872. Now for QQQ, that level is let's call it 314. So for QQQ, this would be 314. So if it breaks above 314, that would be quite positive. And the moving averages are around 296, which is the 200-day moving average, and the 200-day is 290. So as long as it stays above these moving averages, which are moving higher, it would be positive. So we need to see whether or not it can break through this 314 area. Now this is an important area. If it's able to break above this level on a weekly basis, say by Friday, there is a good chance, I would say, that QQQ goes up to this level, which is around 331. So we need to see a weekly close above the high of this candle. See this green candle right here, there was a rejection. So this was around let's say 314. If we have a weekly close above 314, we're looking at potentially this level, the August high of around 331. If we look at SPY quickly, SPY on a daily basis is also looking positive. You can see that it's consolidating above the rising 20 and 50 EMA. You can see that this week on Friday actually it found support at the daily 20 moving average. SPY basically created an indecision candle right here. So, but nonetheless, overall the technical picture remains positive. The moving averages have now crossed above the 200-day moving average. So the levels to watch would be this level right here, which is the top of this candle. So that's around 418.50. So that would be the level to look out for. Obviously above it, the uptrend continues. So these moving averages would provide support. So as long as the price remains above these moving averages, the bias would be to the upside. Momentum indicators on a daily basis are positive. MACD is above the zero line, RSI above 50. On a weekly basis, you can see that it remains above the weekly 20 and 50. Momentum indicators are positive. You can see RSI is above 50 and rising. MACD crossing above the zero line. This is very positive. This is very bullish. The momentum indicators on a weekly basis are positive. So we need to see, now that we've seen the action today, we need to see, if there is any reversal tomorrow. So this week is important. If SPY can hold on to, these levels, I would say the odds would be, that we see further gains in the future. I just wanted to look at some of the individual stocks which have been acting very strong, and this is basically especially on the technology side. The names that are that I want to highlight would be obviously Tesla. So you can see Tesla has been quite strong recently. You can see that the moving average, the daily 20 and 50, they've crossed and moving higher. Tesla looks like it wants to challenge the 200-day moving average, which is around 225. Momentum indicators are very strong. MACD is moving higher. RSI well above the 50 level. So and this suggests that perhaps there's a little bit more to the upside. Even if I look at the weekly chart, you can see the weekly RSI has now gone above 50. This is a positive sign. It has moved above the weekly 200, the weekly 25. So this is looking quite strong to me. I wouldn't be looking for any short opportunities. There could be some profit taking, but given the fact that the momentum indicators are strong, I think there is more to the upside. Another stock that is looking very strong is Nvidia. If you just look at the weekly chart, this thing is looking very, very strong. It has, it's now well above the weekly 20 and 50 EMA, which are now in the process of crossing and moving to the upside. Look at MACD. I mean, this is just going crossing above the zero line. This is looking very, very strong. And look at RSI. So this one is looking very, very strong. If you look at Microsoft also looks very strong here. You can see that it has gone through the weekly moving averages. Look at RSI, it's been moving higher. MACD is heading towards the zero line. So this is looking strong to me. So these are the three stocks which have been pushing technology stocks higher. So I would still, look to look for opportunities on the long side. So long as these momentum indicators remain positive, I would look for opportunities on the long side. Now, looking at the bond market, the yields obviously rose. So let's quickly look at the yields. Now, this is, let me just, so this is the Fed Fund futures for September. For September, it closed at 5.26. So the market is definitely expecting Federal Reserve to increase bond yields to, Fed funds rate to 5.25%. Um, uh, it's entirely possible, given today's strong CPI report, that yields could, move higher in coming days and weeks. I think the market may slowly start to think that Federal Reserve may have to go to 5.5% before any kind of pause, because today's CPI report was quite strong, and after a couple of months of decline, at least the monthly CPI rose quite strongly. If you look at the 10-year, 10-year was actually up quite a bit during the daytime, but finished up only 4 basis point at 3.74. So the question would be whether the 10-year can go above this level. This is the December high, which is around 390. So that's the level I'm looking at. I think if the 10-year goes above it, it could put some pressure on stocks. It's worth looking at the 10-year, because at the moment what you see is that the 10-year is making lower highs. So the only way this lower high will be invalidated would be if it goes above this. So I'm watching to see whether that would happen. At least if you look at the momentum indicators, they are moving higher. So that suggests that there may be still more to the upside on 10-year. The 2-year actually closed above this high. This was the November high, so the 2-year has gone above this level. So we're definitely seeing real yields across the yield curve moving higher. So this is something to keep an eye on. At least today, the market didn't care; they shrugged it off. But at some point, this could be an issue. So we'll keep an eye on the yields, but they are moving higher after the stronger job report. But surprisingly, the dollar didn't rise. I mean, this was surprising. Even though bond yields rose, you'd expect dollar to rise, but you can see the dollar is basically kind of going sideways. The question is whether or not whether there is a delayed reaction to dollar. Now, if dollar rises further, this is the level I'm watching. You see there was a rejection right here in early January. So this is around 105.50. And on the downside, the support would be around this level, because this was the low, which is 100.8. So I'm looking to see if dollar is able to get through, let's say 104, then there's a good chance that we could see dollar test this level. Now, if we look at the gold, gold was basically kind of it closed with a modest gain. It was weak earlier in the day. You can see gold's got this support right here, which is around 1850. So it had a massive sell-off, and then it broke below this bear flag. So it created the doji candle. So the resistance would be around 1875. Today, although it traded above it, you can see that it wasn't able to close. So if it closes above 1875, then perhaps we can see a move to around 1900. On the other hand, support is around 1850. VIX, on the other hand, it just fell quite a bit. It was down over 7%. You can see the VIX got rejected at this level, which is around 2178. The next support is the previous low, which is around 17, which is around 17. So VIX looks quite weak to me. If it's able to clear 22, then maybe the picture changes a little bit. But on a day when inflation was stronger than expected, VIX basically wasn't able to create any kind of energy. You can see the momentum indicators are weak. MACD remains below the zero line. RSI has dipped back below the 50 level. So all in all, I would say that tech stocks obviously where the where the strength was. I just want to see whether or not there is follow through the next day. Sometimes, like market may react a certain way today, but it may react differently the next day. So I think tomorrow we'll be able to find out whether the rally that we've seen in, at least in the tech stocks, is for real. If we see follow through tomorrow, then that will suggest that maybe market has little bit more to the upside. So I'll leave it at that. Thank you very much for watching the video.